Today was a critical weekly close for markets. With all of the back and forth on tariff litigation, markets were already on edge, and we needed to see bulls step back in to confirm confidence in dip buying. Well, fortunately, we got just that. Sure, there was a little cooling the last 30 minutes of the day, but overall, it was a very impressive bounce, especially considering the size of the pullback this morning on those China sanctions escalations. We're clearly still in a news-driven market, but the price action this week, along with those strong bounces from key support, seem to be pointing to more upside ahead. Meanwhile, Bitcoin and crypto are shaping up to have their first negative week in almost 2 months, thanks Bitcoin conference. Many of the charts are breaking down from key uptrending support, but in the long run, that's not the worst thing in the world. A little bit of consolidation, building market structure, even some correction is going to help set us up for that next move ahead. So where do those near-term opportunities lie? We're going to look at the key charts for stocks, commodities, and crypto to determine just that. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a lovely week. Before we dive in, if you could like, comment, or subscribe below, it really does help the channel out, and it helps get this content out there to more people. If you do have any questions as we're going through the charts, or you have requests for things you'd like to see in future videos, leave those down below. I do read and respond to every comment. Now, today I'm going to be looking at the charts a little bit differently. I want to approach them through the lens of a swing trader, and this is coming to mind because I had a coaching session this week with an investor that wants to transition more into swing trading, and we had some interesting conversations around how you shift your mindset, what you're looking for in charts, how you build your positions and structure them a bit differently from investing to swing trading. So I thought that could be informative to you all. Yes, we're going to look at all the key charts we normally look at. We're going to look at the Tesla MicroStrategy pair trade, but I'm also going to look at a few swing trade specific charts to show you guys what I'm identifying and what I'm seeing in the patterns to give me confidence in that entry. Also, tomorrow morning, I'm going to be offering a free perp trading live stream group class. Unfortunately, all of the seats filled up really quickly for this one, but I am going to start doing this on a monthly basis because there seems to be a lot of demand for this kind of trading education. I've put a link to my Calendly down below, and when the next group class comes up, I'm going to post it there. I haven't posted it yet, but you can see my other trading education stuff there. And for whoever follows here, I'm going to give you guys a heads up in a video so you can try to get first in queue because I appreciate you guys following me here. So anyway, more on that in a couple weeks. On that note, since we are taking a bit more of an education focus today and I'll spend a little bit more time in each chart, I'm going to skip the macro news for this week so we can dive right in. So let's talk about swing trading. What's the difference between investing and swing trading? Well, swing trading is more short-term than investing. Investing you might do over a year to several years, whereas swing trading is happening over a few days to a few weeks. There's more active management involved in swing trading, and you're looking for good technical entries with clear invalidations or looking for technical reversals or breakouts of zones so you can have high confidence in a move. Whereas with investing, you're looking for a bottoming pattern and maybe you're layering in on the way down to build a position and get a good cost basis. With swing trading, I'm actually less concerned with my cost basis. I'm more looking at what the percentage gain is from that breakout or that technical reversal to my price target. And I'm not thinking about the cost of each share, but the percentage I can make on my capital that I'm putting into that short-term swing trade. Now, it is slightly higher risk due to the time horizon and because you need to build a strong thesis backed by TA. And what I mean by time horizon is you have longer to be correct if you're investing in something. You can ride out those short-term dips and undulations over several years. But when you're swing trading, you really want to try to get it right and have a clear invalidation where you can stop out if your thesis on a particular stock move is incorrect. So with all that said, let's get into the charts. I'm going to start on the SPX and some of the key charts we always look at to give ourselves an idea of where the market is at more broadly. Then we'll look at the MicroStrategy Tesla pair trade, and then we'll get into individual names and really talk a bit more about swing trading in the latter half. Okay, starting here on the S&P 500, just to give us the story of the week. So we'll go back to last Friday where we had a strong bounce away from the 200 DMA and we rallied away and then sold off fairly aggressively into the close on Friday, which I mentioned gave me a bit of concern. But concern aside, over the holiday weekend, things gapped up. And then Tuesday, we had a very positive day. Wednesday, we chopped around sideways, but then we rallied after hours, which you don't see here on the daily chart because we don't have the after hours action. That was on the reciprocal tariffs being deemed as not valid by, I believe it was a federal judge. And then on Thursday, we opened higher and that was reversed and we corrected down a little bit. And today we had a very big correction to start the day on those China sanctions escalations and then rallied away to have that strong close. So we didn't close at the highs of the week, but given all this uncertainty, and given the support we found at the 200 DMA, and then at this line here at that 58.50 roughly, where you can see just historically that's played a lot of support here. I mean, throughout all this topping zone, it used to be resistance. So that's a critical line for us. And it was encouraging for me to see that we found support here today. And even though this high right here didn't break our previous high from last week, it does seem like the market is perhaps just tightening and finding some equilibrium, and we should print a higher low as we open up here next week unless something unforeseen happens and we open with a gap down. But I imagine that we'll be tightening, and then the market over the next week or two will find its direction. And because of all this strength we've seen, my bias would be in favor of the trend continuing. The one thing that's giving me a little bit of pause is a slight bit of weakness showing in the semiconductor space. So let's switch over there. Okay, if we're going over to SMH, I was talking about a little bit of weakness in this space, and you'd probably look at the chart and say, oh, well, this is just coiling and maybe it'll move higher. And you could say that this might be a bull flag, but the things that are giving me a bit of pause were a bit extended on mean reversion right here. And we had this very clean daily uptrend on the RSI that broke down. We do have support underneath on the semi space on the 200 DMA. This RSI and the mean reversion being extended is giving me a bit of pause. And we also have this gap fill down here. From a narrative perspective, the very positive NVIDIA earnings didn't get the semiconductor space to print a higher high. We've just been printing similar tops around this 250 level. The one thing I'll say from a TA perspective, we have 3 clear touch points here. If we do rally up, fourth time breakouts, as I've mentioned, are common. So I know that's a lot of up or down, but there's signals pointing in both directions right now. And I don't have that much conviction on a move in either direction. So I'll just be watching this overhead zone here, and then I'll be watching the zone underneath right here. I'll most likely set alerts to these to give me a lead on the market. If we do break down, I imagine we would find support at this gap fill and the 50% level. And then if we do break out, we don't have that much resistance overhead, and we could see all-time highs for the space sooner than later. So watch these levels for semiconductors, watch the RSI, because for the broader markets to rally up and hit new all-time highs, we need semiconductors to come along. And if we switch over to NVIDIA briefly, you can see how the earnings led to that positive reaction, and then we had a fairly quick reversal back into the consolidation range. And NVIDIA now, while it was on daily support for the RSI, also broke down. So there are just some cracks starting to appear. This also looks like a bit of a reversal right here. If we print another red day early next week, that would be further cause for concern on NVIDIA. But we do have support below on the 200-day moving average, which is at around 126.75 right now. That'll be moving up a little bit higher by next week. And then we also have this gap fill right here at 123.15 with these previous peaks. So there is plenty of support. It would be a great sign of strength to see it backtest the 200-day moving average as support now and bounce away from there. But let's just give this a few more days to see how things develop. If the semiconductor space can't gather more steam and bring the rest of the market along with it, I would be slightly concerned for maybe a bit of a slowdown in the broader indices. Okay, if we take a quick look at the DXY, it rallied yesterday and then broke down, and gold is also underneath this downtrending resistance that we've had drawn in and has been in a bit of indecision, but we're in the lower half of that consolidation range. If this breaks down, we might get a little support at 3,200, but that even $3,000 level would be the next level of support underneath. I've heard some traders talk about this as a potential head and shoulders pattern. I wouldn't count it as such because this wick on this shoulder is too high, but that also targets that rough $3,000 range. Okay, moving on to Bitcoin, and Bitcoin and Solana are going to be the two that I'll do a bit more long-term and short-term analysis on. So let me just turn off the confluence model just to give us a bit cleaner chart to look at. We can keep the price action on there. So the main things with Bitcoin this week is you notice we had this underside support for the uptrend that broke down. So when this breaks down, this is telling you that this trend at this clip is no longer continuing. It doesn't mean we're going to correct way back down or anything. It just means that we're going to most likely consolidate for a little bit. And if you look at things on a weekly time frame, that's actually not bad, because we talked about this last Friday. We had 7 weeks up. And historically, if you look back in Bitcoin's price action, there have never been more than 7 to 8 weeks up in a row. 6 is actually more common. And here you can see we had 1, 2, 3, 4, 5, 6, 7, 8. And so that was an extension, then a bit of consolidation. 1, 2, 3, 4, 5, 6 weeks up, and then a lot more consolidation. And then here, 1, 2, 3, 4, 5, 6 weeks up. Consolidation, correction. So we've had those 7 weeks up because of all the tailwinds and the strength in the move. Right now, I'm just thinking about a 2-week correction, so 14, 15 days. And we've also talked in the past about cycle analysis and how things tend to move in 30, 60, 90, 120 day cycles. You can also half that 30 to 15, which would be a normal correction period and would be fairly balanced for this move up. So to that point on cycles, if we just measure out from our previous all-time high to where we broke out into our next all-time high, that's 120 bars. So you can see how those cycles work. If we measure from our bottom here to the top, that's 45 bars. So again, like I said, 30, 60, 90, but you can also half that. So it would be the 15s, the 45s in between. And you'll find that often those mark turning points. And given the 45 bars here, I'm targeting 15 bars for this potential next move. So that would put us out to, from the drop down here, if we go 15 days, that would be Saturday the 7th. So I would say Friday the 6th to Saturday the 7th is a good date to mark on your charts, just to be looking out for a potential turning point for whatever this correction ends up shaping up to be. So let me just mark that there. Okay, and then we have our target date there. And in terms of underside support, we do have that strong underside support right here at 102,500. So all the strong supports and resistance I have marked a bit darker. And then below would be 98,000, which we've been talking about for quite some time. I would love to see us sustain or maybe just dip slightly below this diagonal line here, which has been a bit of a midpoint for the overall bull run for the last couple of years. And if we go in close, just identifying support and resistance, I had a support line here just looking at short-term support. So as things break down, we obviously broke down this larger uptrend. We back tested it now as resistance, and it broke down from there. And then I had this line drawn. That failed. So then my next target would be that 102,500 line right there. So you can see I'm just going bit by bit to move my targets and expectations for where Bitcoin could bounce next. We do have this big volume cluster that we're into right now. So maybe we'll get a little bit of support before that 102,500. But we'll just have to wait and see how this plays out over the weekend. Volume tends to drop off over the weekend, so there can be more manipulation as well. Okay, looking to Solana, and you can see how we had that underside support that has been there since the correction bottom that we also broke down from this week. And we did a little retest of that and then just have had a much faster rejection away. And my next area of support that I was looking at, any support maybe coming in, was these previous wicks around 164, but we just blasted through that. And then the bottom of the range right here at 159. And once we broke down from that today, that puts this potential double top in play. You can say, well, this top's higher, but it was just a little wick, and all our candle closes here on the 4 hour are around this similar level right there. So if we measure that out, it takes us to about 135, and I'll just do that real quick. Top to bottom, drop that right here. That takes us just below this support at 136 to like that 134.5 area. So anyway, roughly around 135 is where the target for that pattern is. That doesn't mean we necessarily have to hit it. We may well find good support at this next volume cluster between 152, where we're almost to now, to 145. But the chart is definitely looking weak and things are breaking down a bit more quickly on Solana. I was hoping that we would at least retest the 50% level at the 195 before more of a correction, but we didn't quite get there. And I think, if you're perp trading this, it's just time to be a bit more cautious or to switch your bias to be a bit more bearish, because there could be more downside in this over the next couple of weeks. The only thing that's giving me hope for a bit more of a bounce and some more consolidation is that if you look at the liquidation heat maps at 175, there is a ton of liquidity to take out, and also at 180, there's still a ton of liquidity. So perhaps the narrative could be to push this up, that all this FTX money is coming back in and the market makers could push things back up. But if that rally fails, say either this trend line gets tested and now acts as resistance on a bigger bounce, or we simply can't get above that $180 range where we found all that previous resistance, or the 200 DMA, which would also be over there, that would then be an indicator to me that, okay, this was just a push up by the market makers to grab that liquidity, and we still have more time to go in this correction. But as with the rest of the crypto space, Bitcoin leads the way, so I would keep my eyes on Bitcoin first, and the rest of the market is going to follow. Okay, let's get into the pair trade, and I'm going to assess the MicroStrategy and Tesla charts individually first so we can get a picture of where they are each at. So we found that resistance at that $420 on MicroStrategy, which is no surprise really given these past peaks and the ranges of these tops. The only thing that went higher was our blow off top there for a couple of days. So makes sense that we were finding resistance there. Michael Saylor was also hitting the ATM, as we've been discussing. And really, we found fairly good support in this 360 to 370 level. And we had a positive close to the day. So the question now is, can we bounce from here? Or are we going to go down to, say, that 343 level, or maybe all the way down here to 320? And really, I wouldn't want to see us drop much below that to maintain stronger market structure. And even though the pair trade chart flipped today in the favor of MicroStrategy, the thing that's giving me a bit of pause is that we broke down from this daily RSI, and also mean reversion on the daily is still in the process of resetting. And if I blow up this daily RSI, just so you can see it very clearly, you see this underside support bounce, and then this week, I was talking about this on Tuesday, we had a little bit of a bounce, drop back down, and had a perfect underside test of it as resistance now, and are dropping away. So next week is going to be very critical to watch this. Do we continue to drop away on the daily RSI? That would signal to me a bit more correction in store. Or was this maybe just a few days of deviation and we get back above into the range? So I'm keeping my eye on this, and honestly, I haven't made a swap in the pair trade yet because I'm waiting to see how this plays out, and I just want to be a bit more cautious. And the other thing to consider, we just looked at the Bitcoin chart and how there's weakness there, and it's most likely going to consolidate or correct a little bit longer, and that would most likely carry over to MicroStrategy. Another reason why I'm treading cautiously with the swap right now on the pair trade. But if we look at Tesla in comparison, Tesla had a fairly strong break up from this megaphone pattern and then rejected from that $167 level that we've been talking about as resistance perfectly, and drop back into the range. So there was some weakness in Tesla to close the week. And I think this is just temporary, because if we go back to the RSI, so we are now almost into that daily RSI uptrend to test it as support. So I imagine we will see that next week on Tesla, and maybe that just has us consolidate to the bottom of this range. But if you're looking at this more broadly, we had this consolidation below the 200-day moving average that broke out impulsively. You could be seeing this as a similar thing where it's just under this past resistance, and a breakout would take us to that next 420 all the way to $440 resistance between these past peaks here. So that's definitely something to look out for. And if we test this daily RSI as support and break away from there, that would be the impetus to get us there. I imagine if we do get to this point, that would be a period where Tesla cools off just for a little bit, because the daily RSI would be a bit extended, would most likely break down below this. And it would just be kind of that normal period for the stock to cool off and build structure for the next move ahead. So if we do switch over to the pair trade chart, and from hearing me talk about those, you can probably guess that my bias right now is a little bit in the favor of Tesla, especially with all the events and news and tailwinds they have coming up. And I was a bit hesitant on this rally here the last couple of days to flip back into MicroStrategy, not just because of everything we looked at on those charts, but also because of the RSI that I've been talking about here. And you can see on past flips, we really got above that 70 RSI when the trend was strong. Even early on in the trend, we broke above it. And this last time when we had this false flip, we did break above the 60 level that we've been talking about. So this is more of our trend turning period right here in the middle between that 38 to 60. And then anywhere above that is where the trend is really getting going. But we never broke above 70. So there wasn't that much strength in this flip to MicroStrategy. Then we got back up to 60 yesterday. And I didn't make the flip at the end of the day because the RSI dropped back down. And then we rejected from it today and then bounced back up. If this decisively breaks above 70, I would have to make that swap and get in late. I know a lot of people have swapped back to MicroStrategy already, but just because this has been a bit uncertain and because of what I'm seeing in the other charts, this is the first time in a long time that I'm hesitating to make the swap here on the pair trade chart. So I'm just one guy. Make your own informed decision, please. But that's personally what I'm doing right now. I would rather be a little bit late into the flip and have confirmation than make that flip too early and have to keep kind of jumping back and forth, because I did that a little bit here where I flipped early and then had to flip the rest of that position back. And then I was kind of 50-50 and then was late getting back into all Tesla here. So I didn't really maximize on the moves as well as I could have because of all the swapping back and forth that I was doing. Okay, going back to MU, one that I haven't brought up for quite a few weeks, and I just want to bring this up first as an example of a great chart for swing trading because it is in this very clear range between the low 80s to about 115 on the top. So there's a good chunk in the middle that you can take out of it. And after these first couple ranges, you can see it kind of bounced from the 50% level. And when it broke back down here and found support, I got in on a position and I wrote it up 3 times making that trade on MU. And then on this final time here, I entered, and each time, the thing that's so great about this is that you can set your stop loss just below. And this was on some of our Liberation Day news. You can see it finally broke down from that range and then found support and broke away quite strongly. This actually would have been a great trade down here as it was building structure, but I was not paying attention to the chart at that point because there was so much else going on. So this was a missed opportunity, but now I just check in on this one regularly to see what it's going to do. You can see as we got into the end of this range here, it was getting more and more resistance at the 200-day moving average. Now it seems to be finding some support there. So I'm wondering if this is maybe going to break higher, find another resistance level overhead, and maybe do some of the same. No guarantees, but just keeping my eye on it to see if there might be more opportunities here. Okay, the next one I'm pulling up is Celsius. And this was one that I got into in the low $20 range. And I had it on my radar a while ago because of this double top pattern, which was targeting right here around the $35 range. And then we continued to break down from that, and that $35 range from the target proved to be resistance. And we continued to grind around downwards for many months. And right around this point here, I was looking at it on the weekly. And if we bring up mean reversion and the RSI, mean reversion had never been this low on the weekly. RSI on the weekly was touching the bottom of the range. So I started building a position here. And if we go back to the daily, I had 3 or 4 buys that got my cost basis to around $23. So all in all, a good entry. And the concern that caused this to break down was they had massive growth, but then they had some distribution problems and growth slowed a little bit. And that caused all of this. And here on earnings, they acquired a new women's brand. You know, they had a new distribution partner. All their manufacturing is now in the US. And so the price shot up from there. And when we came back down to test that gap fill, I added to my position because this was an impulsive breakout and that normally has more legs. And I've continued to ride this up from there. Now, This has honestly been a bit of a hedge during tariff times. Even today when things were pulling back and uncertain, this was rallying. But you can see from February, while the rest of the market was going down on all the tariff news, this has been continuing to move away. And we're now into that resistance zone around that $35 to $40. And I would say there's probably going to be a bit more resistance overhead at 42. But this is a bit of a longer term swing trade for me, where sometimes they only last for a couple weeks. This one has been going for several months. And now it seems to be coiling and building strength underneath this resistance. And I imagine if we see a breakout, and I'm putting the odds in the favor of a breakout because of the overall strength that has been shown in this chart, and how now the 200 DMA has been support, and we've found support at these past levels here this week, that it will break out. And the next overhead target for me is that $60 range. And that's the 50% of that overall correction. And now here's the part where I'm not viewing this as a long-term investment. There's more uncertainty in this space. I don't know as much about the fundamentals of the business of energy drinks outside of the fact that they are performing well compared to the rest of the market right now and demand is high. But getting up to $60 would be enough for me to say, thank you, that was a good trade. I will get out of it. I'm not holding this long-term like I am with Tesla or a stock of that nature. And even if you didn't get in this from where I got into it, there's still a pretty decent gain to be had. And this could be treated as a bit of a breakout play. You could watch these tops here. And if we have a decisive breakout, you could enter a short-term swing trade. And this, because I imagine this will be a bit more of an impulsive move, would most likely happen just over a few weeks. You get into that position, you have your stop loss just below at the breakout of this zone, and then you're looking to get out at that $60 level, or maybe just before, in case folks are front running it. So I hope that gives you an idea of how the mindset is different for swing trading. And the other one that I covered last week, which I'll just go over again, is Deckers. And on this entire breakdown, they had some competition from Nike and some manufacturing concerns. They were starting to break down, and then tariff talk started. And they just got hammered because they produced a lot of sneakers overseas. And as we were bottoming here, we had this inverse head and shoulders pattern with this target. As we broke out from the neckline, I got in. And then we started slowing. I talked about this in the last video. And when we broke our daily RSI, I got out because I was just like, oh, this trend is slowing. We're seeing weakness. This uptrending line right here broke, and we're not hitting the target. So I got out once this daily RSI broke. And then they had negative earnings. Earnings were actually quite positive, but they could not provide forward guidance. And I had gotten out of this trade telling myself that I would put the funds elsewhere. But when it dropped this dramatically overnight and went back into key support, which if you go back years used to be resistance, so it's a very strong level that we're into, I redeployed my position just to play this bounce and see if we can get the gap fill up to 122. And over the next 2 days, we bounced from $96 where I entered to almost $110. So not a bad return for a couple days. And I'm just going to keep holding this for the next few weeks to see if we can recover to that level. But you can see how my mindset is really not about holding this long term. It's just about getting a good entry, identifying a level where I imagine it could go to, and trying to take a chunk out of the middle of that move. And the other thing I did is I had my entry at 96. As soon as we broke above 100, because that's been a psychological level, at $99, I moved my stop order there. So even if this has a crash back down, I'm still a few dollars in a profit, and it's a risk-free trade for me at this point. Okay. Case in point of playing assets in a swing trade that I would not normally invest in, we have the PTON chart here. And I haven't played this since the pandemic, but you can see if we drop out to the weekly, just how hard this stock has gotten hammered. Holy heck, since its pandemic highs. So it's nowhere near where it used to be, but we had this strong rally away from last summer. They're building some more brand partnerships and distribution. So it generally looks like the stock is turning a bit. There's a little bit of strength, but again, not something I would be investing in long term right now. But in terms of a short term swing trade, it's definitely something I would consider, and actually something I got into this week. So what did I see? Well, we had the tariff drop, and we formed the bottom there in early April along with the rest of the market. And just like a lot of the rest of the market, it is making a beautiful inverse head and shoulders pattern right here. And this week we broke out from the neckline, and this was one where I did not get the breakout exactly, but I entered yesterday on Thursday as we came back into the neckline to test it for support. So I got in the low $7 range. And today we had a beautiful retest of the 200-day moving average. If we draw out our price target from the bottom of that to the neckline, that's not perfect, but close enough. That would put us up at about just under $10. So from our current entry up to that target, that's roughly a 37% profit. And I'm just going to be in this for a few weeks, looking to that target, and then I'll get out. I'm not going to get to that point and say, oh, I'm going to continue to hold on to see if we can break these past highs. I'm just looking to take that chunk out of the market and then reinvest those funds elsewhere, either longer term in a name I believe in, or rotate this into another swing trade. Okay, looking at one more that is a bit more of a risky swing trade just because of the percentages that this is moving, which is ASST, and we've talked about this a few times over the last few weeks, and I got in at about 275. Where is that? 275, right around there. And I wrote it up, and as we broke this uptrending support, just like we've seen on Bitcoin and Solana, it's like, these uptrends will last for a while, and then as you break through, it's just a sign that things are cooling off and it's time for a bit of a correction. So at the time, if we draw another set of Fibonacci levels for where we would have been right there, as soon as we broke through the 50% right here, we had support on it and then broke through. I got back in and I didn't totally nail the bottom, but started building a position and then was in it again to ride it up. And I had another underside support line marked here as an invalidation of this next trend coming to an end. So on these shorter time frames, things that are very volatile, these kinds of trend breaks can be great indicators. Luckily, as we were getting up to the $12 range, I didn't nail the top, so I was just like, God, $12 is very elevated compared to the entry. I started taking about half my position off, and then this drop happened so quickly that I wasn't able to get out on this. I didn't know when it would intersect this, so I didn't have a stop order. So I got out a little bit too late, and I've been watching it settle, and our 30-minute RSI is oversold. We were getting these signals, we're kind of bouncing away, and it's just been hugging the 50% and now is a bit below it. So the chart doesn't look too strong at the moment, but it does have some support here. So I've been building a little bit of a position again, but again, this one's risky. So just below these two lows where we found kind of a double bottom, I'll call it for now, at $6.70. At $6.50, I have a stop order right now for my position to mitigate downside in the event we have another big crash to this next area of support in the $5.30 range, which, just to give you an idea for percentages, from here would be about a 23% drop. So I'm hoping to mitigate that to just a 4.5% to 5% drop where my stop loss is. So a riskier play, but these kinds of assets, especially while volatility is still in them, can be great for swing trading and making gains. Again, being responsible with your stop losses, your position size. I mean, to give you an idea, the entries I'm doing here are like 2 to 3% of my overall portfolio size. So if something goes wrong, I am not going to be destitute because of this trade that turned against me. I think we all saw that in crypto this week with Mr. Win. Ironic name, by the way. All right, so that's it for the charts, and I hope it was helpful to see how my perspective changes when I'm approaching things with more of that swing trading mindset for a particular asset. If you have any questions, leave those in the comments down below. As I said in the intro, I go through and I answer every single one. For next week, I'm going to be here on Monday, but I unfortunately have a move at the end of next week, so I won't be able to do a Friday wrap-up, but I will be posting on X, and maybe I'll do a quick iPhone video upload just to give my thoughts on how the market closes out next week. Hope you guys have a lovely weekend. Bye for now.